Hi folks, and welcome to the Meaningful Money Podcast. This is session number 337. This is the podcast dedicated to helping you put your finances in order. My name is Pete Matthew, and I'm going to share with you everything you need to know and everything you need to do to secure your financial future. I'm here to help you make sense of money. Here we are once again. Great to have you with me. This is a little bit later than planned due to some medical issues, but I'm really pleased to welcome back Tom Baigrie of Lifesearch to the Meaningful Money Podcast for a little bit of a study into income protection insurance, which is misunderstood and hugely underused, is inarguably, to my view, the most important personal insurance you can have. All right, so we're going to be talking about that as usual. After that, I'll read a review out, talk about what we're going to be discussing next time, which is exciting. And, before all that, though, remember, this podcast continues to be brought to you with the help of my friends at 7 Investment Management. They've been helping me out here for ages, since the spring of 2011, and I'm really, really grateful to them for doing so. Please do check out what they're up to. They're at 7im.co.uk. That's the number 7im.co.uk. And don't forget the Meaningful Money branded investment platform that you can take advantage of. All the information you need to know about that is at meaningfulmoney.tv/podcastinvest. meaningfulmoney.tv/podcastinvest. Okay? Now, income protection is insurance because of what my friend Andy Hart, who I talked with last Thursday in the bonus episode. Andy calls it your human capital. That is your single biggest asset, which is essentially your ability to earn an income. So important, it's ridiculous. Everything is built on that for most of us because we will build wealth one brick at a time out of our income. It's about capturing a greater amount of our income as we go through and building for the future. So it's a really important subject. Hope you enjoy my conversation with Tom as we take a look into this super important subject. Remember, notes and links, they're at the show notes. It's the only link you need to remember, meaningfulmoney.tv/session 337. meaningfulmoney.tv/session 337 is my conversation with Tom Baigrie. Great to welcome back industry legend Tom Baigrie to the Meaningful Money Podcast. Tom, how are you doing, sir? I gather that you're making a full recovery, which is good news.
Yes, I think I'll be back to work for the first time in just over 2 months tomorrow, in fact. Well, I'm sure the reason I come on this podcast so happily, Pete, is that you keep calling me an industry legend. It just cheers me up no end.
Yeah, well, a bit of flattery never harmed anybody, did it? Well, look, it's great to have you back. And specifically today, well, last time we talked all around the subject of protection, obviously an essential part. It's the foundation on which wealth is built. But we want to talk specifically about income protection. So I wonder if you can sort of give us a little bit of the history. I think it's sometimes helpful to understand how these things came about,
Yes, nomenclature or the naming of things is so important. I actually prefer calling it disability insurance, but that hasn't caught on. Okay. Originally, it was a bunch of solicitors and barristers who traditionally are self-employed, and they decided that they were vulnerable, and therefore they set up their own insurance company to protect themselves. That's long been morphed into other insurance companies, but it was from there that the idea of protecting your earnings against, the loss of them through disability first arose. That policy went by an arcane name called permanent health insurance, and that's now been replaced by income replacement. But as I say, it is just a policy that you buy to ensure that if you can't work through disability, howsoever caused, then you do get an income each month to keep you and your family on the road.
So it's so important, isn't it? I mean, I imagine then you've used the word, disability and inability to work. What does that actually mean? Because there's different definitions of that. Because I imagine
yes and no.
Depending on what you're doing. Okay, carry on. Yeah.
Yes and no. I think the common sense definition is when your GP or a specialist signs you off as unable to do your job.
Okay.
That is when you are, you stop being able to earn unless your employer has some benefit system. Okay. We reckon around 7% of the UK are covered, people working in the UK are covered by employer benefits. So the likelihood is your employer doesn't.
You'd think it'd be more than that, wouldn't you?
Yes, you would. Yes, you would. There's another figure that's bandied about, which is 12%. But either way, it's very low, and it's getting lower because employers generally are doing less, and more of us are becoming self-employed or in, if you like, highly volatile occupations, like 0 hours contracts and things like that. The point here is that your question is best answered by the fact that you are unable to work when your doctor signs you off. That's not quite the same as the insurance company's definition. They will insure you against the loss of your own occupation.
Okay.
Now, there are lots of other clauses that you can get involved with, but if you take advice and you buy the right policy, you will, unless you are something like an offshore gas and oil worker or a fire brigade employee, when you generally are covered by your employer because you're in such a high-risk occupation, you will be able to get protection, income protection, if you lose and can't do the job that you do now. That's a very important improvement the insurance has brought about, the industry has brought about in the last few years. So a lot of confusion has been reduced in that regard. But you do need to take advice and get the right policy.
Well, always that makes sense. Now, as far as sort of how much you can cover, it's not possible, I believe, to cover 100% of your earnings, or certainly it's not possible to cover more than you had. If you're earning 25 grand, you can't take out a policy for 50 grand a year of income protection, can you?
No, there's the obvious question of an insurer wanting you to be incentivized to stop claiming.
Yeah, sure.
That you can't be better off for claiming than you were when you were working. I think everyone accepts that. Also, this payment is by ongoing Treasury concession tax-free, and therefore 100% of your income tax-free is worth an awful lot more.
Yeah, sure.
Than your income taxed. So generally, the maximum you can get is 70% of your gross income, which won't be dissimilar in case of certainly of those earning above the national average to what you get gross. Some insurance companies limit you to 50%, but there's plenty of choice out there. So 70% is sort of the amount you cover. That gives you an incentive to get back to work if you possibly can, but it doesn't leave you significantly worse off in terms of money in your pocket each month.
That's important too. So talk to me about deferred periods, this sort of waiting time.
We'll do in a second, but I just wanted to go back to the fundamental need for this cover. I think your listeners should try their hardest to imagine themselves without an income for the next few months. The vast majority of people build coping strategies, we think, that say, well, my partner will look after me, or my children, or my parents, or I could raise money against the house. But the truth is, once you get into financial difficulties, once you do not have a monthly income coming in, everything falls apart. You can't pay your insurance policies you took out for your phone. You can't pay for your phone. The state benefits people used to rely on, they were never that great, but they certainly aren't great now. I can run you through those in a minute. But essentially, unless you have huge savings, then you have a very limited period where your savings and short-term ability to borrow will see you through until you just run out of cash, full stop. I'm talking here about people who are on, say, half national average earnings and above, i.e. earning more than 12 or 15,000 a year. So not just talking about the rich here at all. The question you asked was about the deferment period. That's a waiting period the insurance companies put in so that they're not paying out for every cold and flu you get. Obviously, the longer you let them delay paying you, the less the premiums they will charge you. Now, our average premium for income protection is less than £20 a month. If you took a typical waiting period, or deferment period as it's called, that would be 3 months. And we'd say to you, if you were taking our advice, we'd say, have you got savings or some other means of surviving the first 3 months? If you said no, then we'd say, okay, what about a month? If you said yes to that, then we'd say, right, you should have a 1 month deferment period, because you could have a 1 week deferment period, but those premiums would be much higher. So a sort of cost benefit ratio, 1 month would be for you. We'd encourage you to build up savings to 3 months and actually arrange the policy on a 3-month deferment. That's where a lot of our policies sit in terms of the time before they pay out. That's the time from when you are off work, signed off work, and not earning through to when the policy kicks in. There are other deferment periods, 6 months. Perhaps your employer has some benefits that cover you for the first 6 months or 12 months. We can even stagger those as the employer's benefit subsides, which often it does in 3, 6, 9, 12 months, sort of steps down to zero. And your policy can be stepped up to cope with that. So deferment period is a necessary evil, not an evil, it's a necessary factor to control cost.
Yeah, and that's another argument in favour of an emergency fund. Long-time listeners of this show will know I'm always talking about that. Having a 3 to 6 month of your sort of basic monthly expenses put aside as an emergency fund is good practice anyway. But in this case, obviously, it will reduce the premiums, so it has practical benefit that way. So it's about sort of taking some initiative and some control over your financial stability in the very short term. And it's important, I think, as well to know what employer benefits are and also state benefits potentially. So you alluded to that earlier. Are you happy to just put some meat on that, how that would work?
Yes. If you're employed and signed off work, you will get statutory sick pay. That's, and I'm going to just round to the nearest pound here, that's £94 a week. Pretty tough to live off.
For sure. Wow.
If you're self-employed or don't qualify for statutory sick pay, I won't go into the detail, but if you don't, then you qualify for earnings and support allowance, which if you're under 25 is £57, and if you're over 25 is £75 a week. Again, that stuff, these benefits can't be added to each other. You don't get both.
Right.
The employee and support allowance only lasts for 13 weeks. After that, you're assessed. If you are deemed to simply be looking for work and able to get work, not necessarily your own, then your £75 benefit keeps going. And that's all you get a week, and it's not index linked at the moment.
Wow.
So you're in deep difficulty.
Yeah.
If you are deemed disabled, then you get £111 a week, which is better, but still well short of any kind of living wage, if you were in employment. So the amounts the state provide are an absolute minimum basic hardship reliever, I suppose you could say. They certainly don't constitute any form of reasonable financial planning. And in any event, they're subject to a battery of interviews and tests, which we certainly couldn't guarantee you would pass.
Yeah, the thought is terrifying, actually. It needs to be sobering, I think, because then it'll hopefully lead to action. Why then do you think this insurance is so misunderstood and so underused?
What a good question. I think there are many reasons in terms of the industry, the insurance industry not doing enough to promote it. I could go on for a long time. It's been a bit of a hobby horse of mine, as you may remember, for years, that we don't do enough to promote income protection. That seems to be changing a bit. More and more insurance advisors and financial advisors seem to be talking about it. So the penetration is going up a bit, but it is not anything like the habit it should be. If you think about it, and I'll use an extreme example, if you're a 20-year-old going into work earning your first salary and your employer has no means of looking after you, then you should buy this policy. Yeah. That is so far removed from the national habit, it isn't true. Yeah, sure. Typically, people might consider this policy when they feel a bit old and infirm in their 30s and 40s. That's fine too, but even then, it's not widely bought. I think it's a combination of factors. I think it is the historic reliance on the state that is not there anymore. I think it may be a distrust of insurers and those of us who talk about money, which, well, if you make the right choices, is just nonsense. We're really good and really honest, most of us. and the FCA keeps us that way. So the fraudsters aren't really there. Very hard to find a fraudster these days, I'd like to think anyway.
Yeah, sure.
So that bit of the historic legacy, but chiefly I think it's because people do have these coping strategies. People do think it's not going to happen to me. If it does, it won't last that long. And if it does, my partner will look after me. She'll see me through, or he'll see me through. Well, in all cases where you choose not to insure a huge risk like this, then that's really nuts. Absolutely nuts.
Yeah.
I think the answer is it shouldn't be seen as financial planning. It should be seen as catastrophe insurance.
Yeah.
You insure your house against typhoons and things that seldom happen. Disability happens to around 2 million of us at any one time. About 250,000 people a year lose their jobs through illness and disability every year. That's a hell of a number.
It sure is.
To ignore as an individual.
Yeah, sobering stuff, and hopefully will lead people to take action. This is why I wanted to do this conversation, really, just to sort of hammer home the importance of it. One of the questions I get asked quite often is, employees, it's fairly straightforward. Somebody else is paying your salary, you have a job with somebody else. Self-employed may be a little bit different, but particularly if people are directors of their own limited companies. So that, they've set up a limited company structure. Maybe they're paying themselves a relatively small salary and a higher level of dividends. Is there some sort of difficulty or differences there in how income protection is set up for those people?
Well, yes, if you try and do it on your own, it can get quite complicated. If you speak to a protection specialist advisor, of whom we're one, but there are many, they'll guide you through those loopholes very easily. Insurance companies, not all of them, you've got to choose the right one, have all sorts of abilities to cope with the different earning structures. Dividends can be insured if they're proven to directly come, being a replacement for salary, which of course the revenue won't allow you to see them as, but insurance companies can square that circle, given a proper presentation from an advisor. It's not difficult for us to do it at all. Self-employed have often more volatile incomes, and that means that you could take out insurance when you're earning more, and then suddenly you're earning a lot less when you claim. Oops, you're limited to 70% of the amount you're earning when you claim. Hang on, but I've been paying the higher premiums. That is an issue. The insurance company will refund your premiums, but that's not what you want. No. You want your temporary blip downwards in earnings to be ignored. You can use the right insurance company, and you can get an income guarantee, which effectively builds in an anti-volatility measure that allows you safety from that if you're self-employed. But notwithstanding the need to make the right choice of insurer, and perhaps then the right choice of advisor, these structural problems, the industry has solved all of them really in the last few years. There's been a huge effort to simplify the product, to make it more comprehensive, and to ensure that it lets fewer people down than it used to. And we see a much more satisfied claimant base nowadays. And we have to fight with insurers far less hard to get a fair deal with our customers. We think this product is fit for purpose these days.
Good. Well, that's good to know. Let's talk a little bit about the claims process then, particularly because, God forbid, this potentially could be a multi-year, maybe even multi-decade claim process. So if somebody, does end up with essentially a permanent illness and is unable to ever return to work, how does that work in the ongoing, on an ongoing sense? Do they have to keep reclaiming or what?
Again, choose the right insurer, and the process is relatively simple. Not everyone offers, not all advisors offer a claims service, but we certainly do. And I think most IFAs, they may not be specialist enough in income protection, quite a few, but nonetheless, a good financial advisor should help you with your claim. Our claims desk, we encourage customers to notify us as soon as they are signed off work. Even if they're thinking, this isn't going to last 3 months, I won't be able to claim on my income protection. You never know. Yeah. Notify us, we notify the insurer, and that means that the claim will be ready to be paid. We forgot a wonderful story, or a difficult story that happened recently, where a customer said, I'd like to claim, and we said, great, what's the prognosis? And he said, well, I'll be off for 2 months. And we said, well, it's a 3-month deferred period. And he said, oh, okay, typical insurers, just not quite there when you need them. And we said, well, hang on a second. You may well find it lasts more than 2 months. So we suggest you make a claim so it's ready to pay after 3, if indeed the things don't go quite according to plan. That claim went on for another 6 months after the 3 months, and it paid out just fine. So a bit of advice is to make your claim as early as possible, as soon as you are signed off work. Then the insurance company at claims will, as part of that preparation for paying, will just assess whether the doctor is right. Okay. That's okay for them to do that. They don't normally argue. With GPs, they might send you to a specialist if they think there's a case, but that's at their expense. And then once they agree that you are unable to work, then they will agree to pay you for a period of time, subject to review. Okay. If you have a condition which is set to last decades, then they will set that review at a decade or more. Right. If you have a condition which may or may not last a long time, then they might set it as after 2 months or 3 months. They'll basically visit you or inquire of you and your doctor to see how you are. Okay. The days of them snooping around and being, what's the word?
Sort of long lens in a car, checking to see whether you're actually going to the gym while you're off.
Trying to catch you out. It still happens, but only in very few circumstances where their suspicions are deeply aroused. Yeah. They're very precious of their brands, all of them, and they would far rather pay a claim than get into a big fight because they should have paid a claim and didn't. Yeah. That doesn't mean they're a soft touch. If you are able to go back to work, you should. Crucially, they all offer rehabilitation assistance and counseling and guidance in terms of mental health management, which is a vital part of the solution. Now, you could say that's just them trying to get me back into work early. At one level it is, but at the other level, they're actually offering a service which our claimants find enormously useful. Lifesearch arranges 500 odd policies a week, a month of income protection. So we have many claimants in claim, as it were, and they value the rehabilitation services and other benefits that insurers provide very, very highly. They're very worthwhile. Yes. It's one point to make, Pete, if we've got time enough, that one of the side effects of any form of disability that is aggravated by any form of financial hardship resulting is a decline in mental health. It is very normal for people who suffer an injury, even if it's not that serious, an illness or injury, but it leads to a loss of their income, to then find their woes compounded by depression or other forms of mental illness. Good counselling, which comes as free, even if your claim is not yet being paid, if you're just in the early days waiting for your deferment period of a month or whatever it is, a good counselling can help enormously in terms of managing that very normal and often dreadful side effect.
Really, really important, and thank you for mentioning that. It's nearly 5 years ago. I had Peter LeBeau, another industry giant, on the podcast, talking about the Seven Families Initiative, which was kind of new at the time, which was an industry-wide sort of collaborative thing to extol the virtues of income protection. How did that go? And is there sort of more stuff like that going from the industry to try and sort of develop people's understanding and awareness of the need for this stuff?
Seven Families was a wonderful marketing initiative that really worked at a level. It did that by simply focusing on the genuine effects income protection has on those who can claim on it. The detail was simple. They took people who didn't have it and gave it to them for a year. They knew it would run out after a year. There was lots of support and assistance after that. But for a year, people who would otherwise be in dire straits, recommended or put forward by a charity, were helped in the way that income protection claimants are helped. And the transformation in those people's lives and the rate at which they recovered and the reduction in mental health issues was outstanding, phenomenal. That really impressed the industry. So lots of financial advisors started talking about income protection. And I mentioned earlier that the number of people taking up income protection has grown a bit in recent years. That, I think, is solely down to 7 families. Is there a follow-on or a great big national marketing campaign on this? No. When I ask our massive insurers why not, they say because the market is so small, even if we spent hugely on advertising and doubled our market share, we really wouldn't cover the advertising costs. Right. And I say, yes, you have to increase your market share by tenfold. Right. You've got to do it by 10 times because we do want to get, we wanted, I call it the new term assurance. Yeah. The new life insurance should be disability insurance for people of working age. The market is a long way behind my thinking on that. But nonetheless, there is more noise and more talk about it. So it's a slow process getting an insurance industry to really do wise and clever things, in my experience, but they have improved the product enormously. So it is now fit for purpose. That was the fundamental thing we needed to get right.
Sure. Good. Well, that's encouraging, and I hope that there's bright things ahead. I remember when I first got into this glorious profession, I was doing mortgage advice primarily, and I was sort of lauded by my boss for having the best insurance policy to mortgage ratio, because, this was in the late 90s. So
good for you.
First-time buyers. Well, because it was about priming people who were buying properties. I simply said, look, you need to allow £75 to £100 a month on top of your mortgage payment, because I am not going to arrange this mortgage unless it's correctly insured. I'm not going to put you 100 grand in debt unless you can pay it no matter what. And it's just obvious to me.
Yes.
So obviously, all spheres of the profession need to get behind this. There's no doubt about that. Tom, thank you. Is there anything, firstly, before we just to round things off here, is there anything that we've missed, or do you think we've covered it pretty well?
No, I honestly think if you have any listeners who earn an income or indeed are husbands or housewives, if that's the right expression, house partners, who don't have this cover, then they should review their coping mechanism and decide really whether it isn't nuts not to spend an extra, 10, 15, at most 20, I suppose, but obviously you could spend more on that if you're very wealthy, in essentially underpinning their whole financial pyramid. Yeah. Because that whole financial pyramid teaches on a monthly income for almost all of us. So unless you're a Rockefeller or someone else rich enough to self-insure, and if you haven't got this policy and your employer doesn't offer it, either get them to offer it first or take it out yourself. I really can't see any alternative. Just because the industry is not good at talking about it, that's no excuse. You're listening to the podcast, get on with it.
Absolutely agree. Well, last time you were on the show, that was March, and that was the sort of launch, if you like, of our connection, Meaningful Money's connection with Lifesearch. Yes. And I've mentioned it a couple of times, but I wanted to sort of mention it to you, that the feedback that I've had from Meaningful Money listeners who have come through the link on the website to Lifesearch and have gone through the process of advice with Lifesearch and had their protection needs met has been uniformly excellent. People have come back to me raving about the service, the speed, and just the lack of pressure, and what a great experience it is. So I wanted to say thank you for that, because from my point of view, it's always a leap. I had no doubt at outset, but it's always a leap if you recommend that people in my audience go to a provider for a service. It's a bit of a leap of faith, isn't it? So I wanted to say thank you for sort of honouring that faith, and I hope that's good feedback for you.
You're very kind. It is 86% of our customers, over 1 in 8 of our customers, say they would recommend us to other people, and a tiny proportion get irritated by us. And the Sunday Times says we're the 3rd best company in Britain to work for. I think having a wider team, there's some 500 plus of us now who really enjoy their jobs and enjoy what they do and think what they do is good for society, which we do. I think that allows a service culture and above all an accurate advice culture, which delivers the results for clients. And thank you. It's great to hear that it's working, and I'd love to help more of your listeners and associates every day. It's good work that we do. We want to do more of it.
Absolutely. Well, I'll make sure obviously the links and everything are in the show notes, and it'll be on the top and tail of the show. But Tom, once again, my friend, thank you so much for joining me. It's been great to have you on board.
A great pleasure, Pete. Thank you.
Okay, hope you enjoyed that. My thanks again to Tom. I think it's important now and again to take a step back from the wealth building stuff that we tend to focus on here on Meaningful Money, and just remember about the foundations on which that wealth is built. So if you're on the fence about this or just wondering about income protection, I suggest you get in touch with Lifesearch. As we mentioned in the conversation there that I've teamed up with Lifesearch. And if you go to meaningfulmoney.tv/Lifesearch, the number on that page will take you straight through to their senior advisory team. Now, they those are the folks that have been with Lifesearch the longest, the most experienced advisors there, and they will take you through the process very carefully. Now, everybody that's been through that process who has fed back to me has said what a great experience it was. The guys at Lifesearch have a reputation for brilliant service, so I have no hesitation about recommending you go there. It's an affiliate arrangement, so if you go via Lifesearch and if you take out an insurance policy, they will pay Meaningful Money some of the commission that is generated. It doesn't cost you any more, but there's a kickback to Meaningful Money for an introduction to them, okay? But I do so with no hesitation because it's a brilliant, brilliant service. It's a company that I've admired for a long time. So definitely consider that. If you're on the fence, if you're thinking about it, the first thing you do is to give the guys at Lifesearch a ring, meaningfulmoney.tv/Lifesearch for the phone number to do that, and just have the conversation. There'll be no pressure or anything like that, but it'll give you some numbers to be working with, some figures for premiums and things like that, and some more detailed and specific to your case examples of, how it might work for your particular job and all that sort of stuff. So do that, meaningfulmoney.tv/Lifesearch. My thanks again to Tom Baigrie. If you've got any questions or comments, go to the show notes, meaningfulmoney.tv/session337. Okay, review from Steve-O75. After 43 years of financial illiteracy, I'm now learning everything I need to take control of my future from Pete. Having discovered Meaningful Money a few weeks ago, I'm now pouring through the back catalogue, getting advice on everything I need to know, from pensions to investing and side projects. Pete has become the friendly voice I look forward to on the daily commute. Hello, Steve-O. The dark, scary world of finance is made simple and fun with Meaningful Money. I would recommend this very accessible podcast as compulsory listening to anyone. Thanks, Pete, and keep up the good work. Steve-O75, thank you so much. I'm really glad you're enjoying it. I'm glad it's useful to you. Keep up the good work. Keep going. The great thing about this is that 43 years of financial literacy doesn't matter. Now you're moving forward, and that's what matters. Okay, folks, the summer of in-between episodes is over. I've really enjoyed chatting with all the people that I have over the last few weeks, but next week begins the next proper season of Meaningful Money. Season 15, going to be the most ambitious season yet in terms of its scope and its subject depth. It's called Planning with Purpose, and I just can't wait to get started. And we start next week. Okay, so hope you're looking forward to that as much as I am. So thank you for staying with me over the summer, as I've taken a bit of a breather from 5 Minute Friday and stuff. All that is coming back as well very shortly. So thank you for your patience. Hope you've enjoyed the conversations in the summer as much as I have. Stay tuned next week for the start of season 15. I'll talk to you then. Cheers.